What do you do? All right. Afternoon, everyone. I suppose most of you will be afternoon. Today will be Alexis and me, well, virtual Alexis instead. So it'll be a clash of fundamentals and technicals again. Let's see whether our views align or otherwise. Now, so first of all, Alexis isn't here with us, but she has submitted a video. So let's see what she has to say. Over to you, Alexis.
Hi, good afternoon. Welcome to Sunday Trader Talk Radio. Today we're going to explore a little bit about the US dollar, and what I want to check in about is the correlation between the US dollar and the US 10-year Treasury yields as something we'll look at today. So last week we had a couple of data that came out. We had the Euro. I think the Euro CPI flash estimate, we have the Australia GDP Q quarterly report that came up slightly lower than it's expected. Canadians overnight rate remained the same, and then we had the Europe refinancing rate, or the interest rate actually dropped a little bit, but it's already priced in. All right, USD unemployment claims popped up just a little bit. And of course, we have the US unemployment rate remaining flat. And what is something that we'll be looking at as well is the Canadian unemployment rate actually popped up a smidge. So what we want to look at kind of today is really the correlation between the US dollar and the US government bond yields. Now, generally, there is often a positive correlation. However, it's not always constant, and there are various factors that kind of affect this positive correlation. So when US dollar treasury yields increase, they actually offer, or it's perceived to offer a more attractive return to investors, especially foreign investors, because to purchase treasuries, foreign investors must buy the USD, and this kind of increases the demand for the dollar and strengthening its value. Now, this is one of the primary drivers of the positive correlation. So higher yields from the US dollar attracts capital, which actually boosts the dollar. Now, when we look at this, this is a weekly chart. We have the US dollar index on top and the US government 10-year yields, the 10-year bonds below. So if we put it here, now you can see there is a little bit of correlation, the way the government bond yields move and the US dollar index moved, okay? And over the last couple of years, the correlation or the relationship has been changing slightly as well. All right. So when we talk about the increase in we talk about the correlation, we really have to kind of see how sensitive it is, the US dollar is to the price moves of the government bonds. Now, when I look at the US dollar 10-year yields, normally the currency pair that we actually do want to trade is actually the US dollar Japanese yen. So this is swapping it over here where you can see the correlation a bit cleaner. Okay, and let me go to the US 10-year US dollar Japanese yen. Okay, so you can see the US dollar Japanese yen. All right. Not it's not super correlated all the time, but usually it kind of moves quite in the US dollar 10-year yields actually kind of leads the movement for the US dollar Japanese yen. So you can see over here, let's just look in July. July when the USD 10-year yield starts to drop, you can see over here, right? And then the US dollar yen starts to push down a bit, and then the US 10-year yield start to go up, and then you see the USD Japanese yen going up as well. So the correlation here, you know, it's quite because it's quite obvious, a little bit more obvious. When I'm going to draw this, and then there's a move up, and then there's a little V dip here, there's a little dip here. Okay, and then of course, if we continue on this trajectory, you can see the correlation happening again. So when we kind of zoom in, this is a daily time frame. Okay, this is a daily time frame. Okay, price, maybe it's a bit change, it's cycling back up already, and it looks like it's cycling back up. So it's a little bit of a US dollar government bonds leading the US dollar Japanese yen pricing. Now, the reason why I'm looking at the US dollar this week is because in the news there are talks about stable coins. Now, yes, we're going to turn to crypto for a little while because stable coins as in crypto stable coins are getting a lot of attention, And I think it's because of how stablecoins kind of work that there is a little bit of a question mark that's coming over there. So stablecoins, by definition, is slightly different from crypto in the sense that it has a peg against a something. So, for example, USDT is the stablecoin is pegged to the US dollar. So, with stablecoins, the promise is that a dollar is a dollar. They are meant to be backed one for one with reserves of equal value. So, the holders of stablecoin do not receive interest, but often the operators do due to the billions of dollars a year, in fact, or any adjustment for inflation because they are the ones backing the stable coins with a dollar for dollar value. So which means if I am an operator, I sell you $10 worth of stable coins. In my pocket, I'm also backing my value of $10 stable coins with $10 worth of US dollar, for example, for USDT. So it doesn't sound like much at this point, but when stablecoin money comes in, the impact on short-term government debt prices is about 2 or 3 times larger because of whoever holds the short-term debt. So stable coin operators now hold a lot of short-term US debt, in comparison compared to, for example, we used to say that the holders of US debt, which means US treasuries, a large proportion is held in China. But stablecoin operators are now taking over and they are holding a lot more uh, US debt in that sense. So for example, between I think stablecoins and China, I think they've already bought 40 billion worth of treasury bills in 2024 itself. And of course now we are talking about stablecoins a little bit because there are talks on regulation, there are, and what happens when this demand going up. So if a lot of people are looking at stablecoin due to the Bitcoin move, and of course Bitcoin has gone up all the way to I think 100 above 100K, and there's this, of course, if you want to hold Bitcoin, sometimes it's easier to trade Bitcoin by, swapping it with stable coin, right? Because you go BTC USDT, it's easier than taking cash and buying the Bitcoin and then coming out in cash again. So the pair that usually moves the Bitcoin currency, the Bitcoin price is Bitcoin slash USDT. So this is why, this calls for, the Trump, that Trump is kind of related to the whole Bitcoin saga in the sense that any regulatory statements he makes is going to affect the demand and the prices and all that. And of course, downstream, downstream, it will also affect the demand for the US dollar because of the demand for the treasury yields, right? So it's like kind of a domino effect over there. So this is why when we look at um, the US dollar what we call it, the strength in the current climate, we kind of have to figure out where is the demand for the US dollar coming from. So over here is Bitcoin. Okay, Bitcoin has popped up all the way, this is daily time frame, all the way to hit about 112,000, now back down to 105,000. Now, I'm not so much interested in the price of Bitcoin as more of the demand for Bitcoin. If you want to buy the Bitcoin, what is the procedure? The procedure usually is first, you take your US dollars, all right? You take your US dollars or whatever currency that you have, all right? You take your US dollars, or if you are in Australia, you take Australian dollars. You're going to sell the currency over here, and then you're going to buy. Okay, very often, they start off with buying USDT because first you have to put the USDT, which is a stable coin, into your crypto wallet, right? So whatever currency you use, you're selling it, and then you're buying USDT. You're going to put this in your crypto wallet. And then after when it's your crypto wallet, then only you kind of exchange it with, or you kind of sell it and transact into Bitcoin. So this process is what usually Bitcoin traders or Bitcoin buyers do. And what is the effect of this is the operators who actually provide the USDT stablecoin, every time they sell USDT to those people who are buying it, what they need to do, they are going to back it by holding a certain amount of treasury bills as well. I mean, I'm not sure what is the time range. It can be 2-year treasury bills, 10-year treasury bills, but definitely the treasury bills yields are something in play, right? So if I was a Bitcoin, or if you were a Bitcoin operator, and if there is an increase in demand for the USDT, you need to back your stablecoin because that's the purpose of stablecoin. What you're going to do, you're going to hedge, you're going to trade in the US yields, and this is what's going to happen. So there's this huge demand coming in for treasury yields from stablecoin operators, and what this tells us is it tells us that when we look at the DEX, the US dollar interest rate, when the US dollar is so cheap, okay, when the price of the US dollar is so cheap and the price of Bitcoin is so high, what's going to happen is there's going to be a move in one direction. Either people are going to sell off their Bitcoin uh, back into USDT and then from USDT cash it out into US dollars to spend, or they're going to speculate and they're going to want to buy more Bitcoin and then they're going to increase the demand for stablecoin, and it goes either way. So there is some volatility in the US dollar also due to the crypto trade over there because of the increased demand or the increased attention Bitcoin trading has in the market right now. So if we were to look at the USDT over here, price has gone down all the way now to about 99.202. You can see the huge push towards the downside ever since Trump took over. Now Trump wants a weaker dollar. He has got a weaker dollar. It has gone down effectively more than 10 points, $10, or from 110 all the way to 99, slightly more than about $10, 10 units in terms of the US dollar index. So what this means is in relation to where price was in the last couple of years, US dollar is kind of deemed a bit cheap, right? It's cheap. It's kind of cheap right now. Whether or not it will go below par value all the way down to 89.95, we are not sure. So if I use the US dollar yen as a gauge, all right, what's been happening in the US dollar yen? Price has been testing off the support level of 141. Now this just happened in somewhere in mid-April. Price bounced off the 141 level mid-April, cycled towards back up, came back down, didn't quite hit the low, bounced off about 142, and now headed back up against US dollar yen. So I suspect if and I think if you observe the news, you will see Donald Trump trying to convince the Fed to lower interest rates, right? So he is trying effectively to further weaken the US dollar. He wants to do he wants to do something over here, and we don't know whether the pressure will be effective or not. But what it looks like there is a good probability for the US dollar to hit back up, at least maybe towards the 150, 151 level. So this is a short-term US dollar play. In the interim, if nothing changes, if the Fed holds its stance against Donald Trump and does not drop the interest rates, then we might possibly see a slight pop in the US dollar. So what I'm looking for is opportunities to go long on the dollar yen, maybe first towards the 147 level. Then if it can break the 147 level, we hit towards the 150 level. And if it can break the 150 level, maybe towards the 151 level. Again, all this is in contingent with the policies that are coming out from the US. So very volatile trading, which means we want to really use our technicals to kind of figure out where to enter and where to exit, right? And again, speaking of the US dollar, if there's potential strength coming in the US dollar, the dollar sink, which I've been looking at for the past 2 weeks now, is kind of showing signs that it might possibly be ready to slowly cycle upwards, right? So we had that touch off the 1.28 level over here. Price headed back up, tried to come back down again, and it gave me a higher low over here on the daily time frame. All right, now, if this trend line holds, so if price continues to bounce off this trend line, continually giving me small higher highs, higher lows, then I think small risk buys over on the dollar sink will be possible. And of course, I prefer to you kind of look at it on the shorter time frame. So this is the 4-hour time frame. Now the 4-hour time frame doesn't quite convince because I'm not quite liking the way this area is actually ranging over now. So we might have a higher low over here on the bigger structure, but over here this is the question mark. All right, so what I want to see is I want price to break above this area to show me that okay, even on the 4-hour time frame we have cyclicity. So if the 4-hour time frame can give me cyclicity to give me continually higher highs, higher lows, then I think small bias towards the upside can be accumulated. So this is how I plan to trade the dollar sink. And again, dollar sink moves quite slowly. A lot of times it tends to range. And what is on our advantage right now with the dollar sink is that if you're using your JDR securities trading account, it gives you positive swaps. So it's okay to slowly accumulate small risk buys over here. No big risks, no big lots, of course. What we're looking at is to kind of figure out where we can time the early entry into the dollar sink move, and eventually the exit point would be, of course, the first point of TP will be 1.30, which used to be my point of purchase. All right, I used to want to buy at 1.30, but price has been hovering below 1.30, so my first target exit is 1.30 here for a small partial TP probably. And if price can break above 1.30, then we'll hit up to the 1.31, 1.32. And of course, long-term target is actually nearer to 1.33 side over here. This is on the daily time frame. Okay, so this is a daily time frame, and you can see the longer view time frame is to eventually hit all the way to a mid-range level of 1.35, which is where the US dollar sink has been living for the past couple of years. So this is an area where I feel the Singapore government might be comfortable allowing the dollar sink to live in at least in the medium term. All right. But of course, to be able to reach a point of stability, we have to get past the volatility of the US dollar. And for that, price kind of needs to pop back up first. All right. So we are at the turning point now. And if it doesn't, there is also a small probability that price, if this structure doesn't hold over here, price might break below the 1.28 level and cycle maybe towards the 1.26 over here. So again, this is a little bit it is not a very safe place to trade right now. I really do need to see the market structure change over here. Really need to see that there is going to be more demand for US dollars due to their Bitcoin trade, the Bitcoin, the Bitcoin market as well, and to be convinced that there is a demand for US dollar before, we want to pile in the risk on this one. So the first 1, 2 trades, keep it as a small risk, and then later on, once confirmation is in, then only we are more comfortable scaling in. All right, so that's all for me this week. This week is really about the US dollar, kind of seeing where we are at in the mid-year mark. And with that, I'll end off this video, and I'll see you guys in the other streams. Cheers, everyone, and bye-bye.
All right, thank you, Alexis, for that. Seems like she's keeping a very close watch on US dollar. I'm actually rather scared of US dollar at the moment. Let me grab the screen. All right, so that's the fundamental part of our analysis. With that, I'll be sharing my technical analysis using the currency indexed and see what I have up for the next coming week or two. Now, top of my list, I will always structure the strongest to the notcher and to the weakest. So, top of my list, we'll go to the strongest. I think I'll be looking out for the Canadian dollar. Now, coincidentally, uh, I think the what do you call it, the commodity pairs are actually moving quite well at the moment. I guess no thanks to Donald Trump with all his threats and tariff. Now with the Canadian dollar, you can see that price has gone down. It briefly dips below $70 for a couple of weeks and then it comes back up. And now it has break and retested. In fact, yeah, you can see that it breaks, retested the following week of a very, very strong psychological level. I would say horizontal level. Price looks to be set to move up. Now, with that being said, I would say that the movement of Canadian dollar moving up won't last very long. You can see that this is a weekly chart, by the way. The overall movement of the Canadian dollar is sloping down. Yeah, so I would say that this is actually a short-term retracement, but bear in mind this is a weekly chart. So the daily traders, the 4-hour traders, the 1-hour traders still have plenty of space, especially the lower time frame. Yeah, so I would really expect price to actually test the $74 level, which is high up here. Yeah, so for me as a swing trader, I would easily, if I trade anything against the cat, strengthening of cat, I would easily get, I would say at least a 3-to-1 or 1-to-3. I'm always conscious about the way I should say it. Yeah. So the Canadian dollar is the strongest to me at the moment. The next comes in line would be the Aussie index. Now I can Aussie index again, long-term trajectory is actually now I won't say long-term trajectory. The It is a bit messy for Aussie index because it's been consolidating fairly well. Yeah, so you can see that a couple of weeks back, a month back, price has actually tested $60, bounced back up. Now I don't see any significant horizontal level here, so I would actually expect price to travel all the way back up to about $69, $68 around this region. So plenty of space for me to actually ride it up. Next in line is actually the Swiss. Now I have a vague feeling that this might be I would say it's an expired view that Swiss is actually connected to gold, but a lot of people still seem to have this notion. Now, price against very 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 strongly break 120, dip back down, and then come back again. So I would say Swiss, look in the past, it has temporarily actually break this level. You see that it's back in like what 2011. Yeah, shoot up, come back down again. So I do expect Swiss can actually go higher, but won't be in this space for long. Yeah, so ride it while you can. Now in the coming weeks ahead, I'm looking for if I'm trading against any Swiss pair, I'll be long Swiss, no doubt about it. But looking at there's a bearish bar the previous week, so I'm waiting for some kind of higher low. Yeah, a retracement movement. When it's over, then I'll be happy to jump in. Yeah, so I'll be a bit careful with this. But or otherwise, if you're going to trade this pair, just put your stop loss further away. Yeah, so that you'll be safer. But no doubt, I think it will actually travel higher. Now, then followed by the next three pair, which I'm not so sure. The first one is actually dollar index. So I marked the dollar, the euro, pound, which is I'm not too sure where it wants to go. Now, technically speaking, dollar ranging, break 100 level. Can it go lower? In the past, it definitely did go lower. But I would further wait for price to actually test the $100 level and give it a week or two, let it test the $100 level. And if it's a failed test, that means it wants to go lower. Simple as that. Otherwise, it might just break back. But this might be a false break and goes back up. Yeah, so for time being, it is not entirely sure. Now, from what the price action suggests, I think the daily and 4 hour trader might want to stay out of this. But the lower time frame, the 1 hour and below, I think you'll still have a fairly good chance of trading back to the 100 for just the following week, and then you must exit the position. So this is a really, really short-term position. But otherwise, just wait it out and wait till the dollar gives us a clearer position. Now, same thing, euro. Not entirely sure where it wants to go. You can see that price, quite erratic movement. I don't see any. I don't see as a range or a trending chart. Yeah. So the moment price actually broke the 110 level, it shook up fairly fast within a week. And then again, a strong rejection. Now, this might be a potential double top forming. Double top means that it's a rejection of highs. It might shoot back down to the 110 again. Now, when I say this, yes, visually I can spot there's a horizontal level here. But against, I wouldn't really bet against for or against euro currency at the moment. It just isn't entirely clear to me where it wants to go. Now, if you're going to trade euro, my money will be short again, uh, back to the 110 level. It is I would say it's not a very short-term play. Probably give it a 2 to 3 weeks play. Yeah, but disclaimer again, I say I'm not too sure. Now, pound very similar outlook with euro. You can see that previously ranging nicely for break, come back down, break again. I don't really know where pound wants to go. In the past, definitely it has break above this level. Yes. So comfortably saying it may go up to the 140 again. So until it gives me clearer indication where it wants to go, if it's going to go higher, I'll wait for the pound to actually form a higher low, which is around this region. As long as I see a low test bar, an engulfing body of sorts, then I'll be more comfortable trading the pound to the long side. Yeah. Barring that, I don't really want to touch pound at the moment, simply because although we may see a rejection over here, it is as a 4 hour trader, as 4 hour swing trader, there's too short a distance for me to do anything. Yeah, so I'd rather just stay out of pound for this week. Now, Kiwi on the other hand, you can see that price broke below the $60 level. Oops, very nice bounce off the horizontal level, come back up to $60, and now it seems that yes, it did break higher. It actually did gap up. Yeah. So there's two forces that is aligned with my outlook that I'm going to short Kiwi because first thing it gap upwards. I'm always looking for price to close the gap. Yeah. So that is a very, very short-term play. But on top of that, because the $60 is a very strong psychological level, and this is a very, very nice looking high test bar, I'm waiting for price to actually trade below $60 level. At minimum, trade back up to $58, or better still, down to all the way to 56. Yeah. So I have very, very strong feelings that the Kiwi will continue to go down its downward trajectory. Last on my list for short is actually yen. Now, at one glance, you can see that $70 is a very, very nice level for price to actually break, touch and go, touch and go, touch and go, touch and go. So you can see that previous week, price gap up, close the gap, and push it down. Yeah. So I'm waiting, not that I'm waiting, I'm just going after any yen pairs for me to short back, uh, at least down to the $67, if possible, down to $66. So with that, let's have a look at some of it. That we can actually have a play at. So top of my list will be CAD and Aussie. Bottom of my list will be Kiwi and Yen. So naturally, I'll be pairing CAD Yen. So let's see what we have here. So CAD Yen, 1 hour chart price has started moving upwards already. So we are still in a very early stage of the uptrend. Yeah, you can see that price broke previous high. I'm just waiting for a retest of the previous high. I'm happy to go long. Yeah, this is a very simple, straightforward setup. So against the next one that I'm looking at is Kiwi CAD. Kiwi, I'm going to go short. CAD, I'm going to go long. Oops. So Kiwi on the 4 hour chart is consolidating. Now, when you see price is clearly consolidating range movement, don't ever trade in the middle of the range. It's a very, very bad idea unless you're employing another sort of trading system. Yeah, management system, not trading system, management risk management system. But otherwise, I will just happily just patiently wait for the Kiwi cap to actually go up to the high, the extreme, and then I'll just short it, partial take profit at this level. Yeah, in a range, it's always good to partial take profit at the extremes, or just slightly higher up. Long-term view, again, I would expect Kiwi to weaken. So partial take profit here, break and retest, and I will scale in another position here if it's possible. Yeah, you can see that Kiwi Cat, it has potential to actually go all the way quite low. Now, I would say potential, but as a technical trader, I'll just wait out for the setup to happen. Aussie yen, now very, very similar to cat yen position, right? So you can see that price move up, move down, move up, move down, break previous significant high, just waiting for a retest, similar to cat yen, and then I'm happy to go in. Yeah, it seems that the previous high position, which is around the 95 mark. Yeah, this is where I would scale most of my position really. Right, this is a very, very simple break and retest. Aussie Kiwi, again, I emphasize CAD and Aussie, I'm going to go long. Kiwi and Yen, I'm going to go short. So naturally, Aussie Kiwi, you can see that price previously downtrend, consolidation, break up previous consolidation level. In fact, it has already tested the previous high. I'm just waiting any sort of reversal price action. I'm happy to jump in and trade it to a long side. Yeah. And the last on my list is Euro Pound. Now let's have a look at Euro Pound. Now, Euro pound, because it's in the middle of, now doesn't mean that I want to stay out, that there's nothing for me to trade. So if I stay out, that means I just waiting for price to break, or a very clean break of the consolidation level. Yeah, so I don't have a position bias to go long or short. So this is why I say that you can see a Batman, what's his katana? No, the rank, the boomerang that he throws about. Looks like it. Now, jokes aside, if you mark this as a consolidation box, I'm really just waiting for price to actually just break out of this box, right? So once price break, be it to the upside or to the downside, then I will take a position. I'm not going to take any position at the extreme. I'm going to wait for it to break the extreme. Uh, price is going, and then price is telling me that, hey, now I know where I want to go, then I would trade it. Before that, because I marked euro and pound, it doesn't know where it wants to go. I will leave it there until it proves to me that where it wants to go. So that's about it. This is how I analyze the pairs, and this is my outlook for the next 1 to 2 weeks ahead. So with that, thank you for joining me, Alexis, today, and have a good trading week ahead.